Yo, what's good YouTube? It's your boy Oskate, aka Mr. Steal Pips. And today is a video on how I get my daily narrative, how I frame my trades, this and that. It's the most asked question, so y'all better pay attention. Grab a pen, grab a paper, and let's get straight into it. How I get my bias. Let's take an example of a downtrend. And let's say this is the daily time frame. The D. You already know what D stands for. Nah, not that D. The daily. The daily time frame. The D. Alright, so what I look for in price. I'm looking for price to go from internal, which I internalize as fair value gaps, volume imbalances, mostly fair value gaps. So price has to get into internal range liquidity. Before then, targeting external range liquidity. Follow my mouse, by the way. This would be external range liquidity. And then we target this. And that's how I get my bias. It's that simple. It is that simple. And then right here, you want to chill. Wait for it to come back into internal range liquidity. After it comes back to internal, then you wait for whatever entry confirmation you have. You already know. I used the unicorn, aka 2022 model, aka honors making money model, aka the market milking model. But so there's a fair value gap right here. We tap back into it, and then we go for external range liquidity again. And now let me give some more sauce. Okay, let's just say this is the high of the range. We put our fib from the high to the low. And when do we want to be selling? In premium. Where is premium? Is this big place right here. It's that simple. So we tapped premium. Now we want to sell. And guys, let me give a gem. So if this is the daily time frame and we tap into premium already and we're outside of premium, it's okay. Because we have the 4-hour ranges. That's where time frame alignment comes into play. So if we get the basics down of the daily time frame, internal to external, this is our range until it breaks here. Then our new range, let me remove this, is this, and then breaks here. When I say internal to external, I mean fair value gaps to swing lows. We are using the bearish example. So fair value gaps to swing lows. Fair value gaps to swing lows. Let me repeat myself. Fair value gaps to swing lows. What did I say? Repeat. Fair value gaps to swing lows. Alright, so that's the basic. External range liquidity to internal range liquidity. It is that simple. Write it down. Or if you want, write down fair value gaps to swing highs or lows. Simple as, bro. It's that simple, bro. It is that simple, bro. Okay, so if this is the daily time frame, I spoke about time frame alignment. If this is the daily, then we want to see the H4 in sync. When the H4 and the daily is in sync, are in sync. Like let me put it like this. I'm gonna put it easy for you guys. Daily plus H4 sync. Let's say daily bull. And the H4 is also bullish. What does that mean? That means money. Let me make it simple for your TikTok brain. Daily bullish, H4 bullish means money. Alright, that's simple. Okay, but this example is bearish, so let me take the internal. We wait for price to retrace to internal, and we would like to see it be premium. And then we are here. Let me take a circle. So the price action right here, we're going to zoom into it in the 4-hour time frame. And in the 4-hour time frame, we'll probably see price do something like this. It's going up. And then we tap the fair value gap. We have a break. We retest it and then drop. Okay, let me make it a little bigger. So this piece of price action is this, but this is the H4. This is the H4. This is the H4. Let me make it obvious for you guys because you guys keep asking me the simplest questions when you can just rewatch the videos. So this is the H4, this price action here. This is the daily fair value gap, which I have just shown right here. When we tap the daily fair value gap, we want to see some kind of confirmation, or you can just enter off the daily fair value gap. I don't care, but I like to wait for confirmation. So right here, I love to see a sweep with a break, a market structure shift. And then I like to see a retest of the breaker alongside a fair value gap. That's it. It's that simple. And I'm going to give y'all a gem, so pay attention right now. Pay attention. So there's probably a H4 candle right here. I know this is a daily time frame, but just imagine this like a H4. Like a H4 swing high, which got created in London or something. When we sweep that H4 liquidity, there's so much more confluence of price wanting to reverse because we took out early sellers or sellers that didn't take profit yet. Okay, capiche? That's a low confluence. I just gave a gem. So we would take that liquidity. Let's say this is a liquidity point. We take that liquidity point and we have the shift. We have this beautiful breaker. Price taps the breaker. You can sell here. You can zoom in to the 5 minute and wait for a unicorn there and just risk it because the daily is backing you. You don't have H4 institutional sponsorship is what I like to call it. You don't have H4 institutional sponsorship yet. But if you tested it and you think you can know when it is likely to reverse, because there's quite often a reaction from daily fair value gaps. So you can aim for low hanging fruits even on the 5 minute after it taps into the daily. You don't need H4 confirmation. I'm just showing what I like the most. So then we have the H4. We take out a swing point. We displace down, leave a breaker. And guys, let me drop another gem. When we make a breaker, we don't want to see price disrespecting the breaker. This would make our trade idea lower probability because in an ideal scenario, this breaker should hold. Why? Because there's trapped traders in here and we don't want to give a chance for these trapped traders to offload their positions. Because when price is moving in an uptrend, people are going to try to long here. And when price retraces all the way up here, we're giving them a chance to offload their losing positions. You need to understand how price works. That is why breakers are such a strong algorithmic pattern, because all the people that were longing and were waiting for this retrace, order block or something too long, are now crying, they're mouthing because they don't know how price works. They don't know the higher time frame narrative. And I don't want to sound ego, but obviously they can make money like that, but I don't make money like that. I don't care about any strategy. You can do whatever you want, but I just say it in this way because that's how it suits me. Like I like to think that way. All right, so we have the time frame alignment of the H4 and the daily. Let me go to the right. And then I'm going to do the exact same like here. But we're going to zoom into this. And let's call this the M5. So this is the M5 time frame. You guys can already guess it. You guys already know what I love about my model. It's those trap traders. So we zoom in and we're going to look for the exact same price action. The exact same. Obviously not the exact same, but the exact same entry pattern. Trap traders. Breaker. We would love to see a fair value gap and maybe an inverse fair value gap. Just indicating that we're going where? Down. And then I just set my limit on the breaker. It's a wick. Don't ask me why. I like to do that way. I have my data backing. That is the best chance for me to get tapped in and get good results. It fits my psychology, it fits my personality. That's why. And then I put my stop usually on the candle high or maybe some other invalidation levels. And I target 2 standard deviations. Are you guys happy now? I made a whole video on how I get my bias. And it's that simple. It, like, bro, you can give a little baby this and he would understand it. So please, if you don't understand this, rewatch this video. Because this was the most asked video. So if I don't get all the views on this, then I don't know. Then you guys were capping. You guys don't want to put in the work. You guys just want to know. Like, you guys just want to get it spoon-fed to you. And I just spoon-fed it. So better pay attention. Better test this out. It is that simple. Even on a daily time frame. When we have the daily doing a market structure shift like this. And we have a breaker here. You can even apply it like this. You can even make them all breakers. It doesn't matter how. You just gotta understand the price moves from internal to external. As you guys can see here. Internal. And then you target external. Internal. And then you target external. But you don't target this external. You target this external. So that's why you got RR. Because you have time frames in alignment. So what I like, the daily H4 and the M5. Yeah, I just dropped some crazy sauce. I guess that simple. I don't know what else to put in this video because it is truly that simple. Maybe like drop a comment on what you want me to do next. And I'll speak to you guys in the next video. Join the Discord. We already have almost 700 members. I don't even know. Follow me on Twitter. Like, comment, share, and subscribe to the video. Much love to y'all. I hope this video cleared up some air on how I get my bias because it's truly this simple. I cannot make it more simple. You just have time frames in alignment. You have all of them bearish. So the daily is what? Bearish. The H4 is what? Bearish. The M5 is what? Bearish. How can you not make money when all the time frames are in alignment? And I know y'all have been trading CPI. I know how active my Discord is. Y'all have been trading CPI. Let me see. Y'all have been trying to CPI, my bad. I mean this week. So CPI week. Y'all have been trying to trade this. Where do you see what I just outlined? Where did I outline this? Where do you see something like this? Where do you see something like this? Where? Where do you see it? Nowhere. So why are you trading? You want to have all the time frames in alignment. You want to have institutional sponsorship. And how can we know there's institutional sponsorship? In my opinion, how I learned it, I want to see fair value gaps. I want to see price displays. That's how I know there's institutional sponsorship on the higher time frames because that's where the institutions operate from the monthly, weekly, and we want to follow that. We want to follow that to make some money. I don't want to chill on like the 5 minute and lose my mind watching this price action right here. I don't want to lose my mind watching this. I want to chill. And when I see price go up like this, tap a daily fair value gap, and then I go to the H4, and I want to see a breaker on the H4, wait for it to retrace, and then go to the 5 minutes, and then I look for a 5 minute entry pattern. That's simple. That's simple. I cannot make it more simple. So, I hope this video helped you guys out a lot. Let me go back to the H4 so this looks nice. Yeah, I guess study, practice. If you have any questions, join the Discord. Ask me the questions in there. Please do not DM me. I get so many DMs, guys. I'm sorry, but I'm a busy man as well, and I cannot answer to all of them. So sorry if I haven't answered to yours. I really do my best, but it gets quite hard. So I understand these people that put a paywall on their Discords from now on because I did not know there would be this many questions. So again, thank you, boys, and peace. Take care. Wait, let me remind y'all. Like, comment, sub, hit the bell to get notified for my videos. Follow me on Twitter. Join the Discord. Peace. Take care.